to the Stock Market Morning Prep video for Tuesday, March 25th. Markets opened higher yet again and clearly sold off, so we had another intraday reversal. This is going to be the fourth one in the last, I believe, 5 to 7 trading days. So that tells me that sellers are willing to sell stocks up at these levels, so you have to be really cautious here. It looks like the market is indeed starting to turn and carving out some sort of a market top. Real quick with the numbers, Dow Jones down 26. Didn't look too bad, but if you looked at the intraday price action, didn't look too great either. NASDAQ down 50, and again, that is getting clobbered by biotechs and big cap tech, which should be momentum players such as like Telsa, LinkedIn, Priceline, Google, Netflix just really took it on the chin, and of course the Russell down 15. So that tells me that some of these big darlings are now really they're oversold already, just alone in 2 days, in 2 trading days. So Friday and yesterday was nothing to write home about. There was nothing good about the markets. There are some key stocks that I do like that are holding up relatively well, and I'm looking forward to see if the markets are able to at least rally a little bit off of these lows and then sell off again. And if you remember my my idea of what I got off the charts here was that we sell off and then we rally one more time, get everybody back long, and then the market sell off again, and then we correct for several weeks. So I'm still waiting for that one little big push up. Now again, it's only been 2 trading days, and believe it or not, the markets have still held up relatively well, despite of the sell-off. The S&P did at least, and I'm going to show that to you in the chart segment, okay? But I do have some indicators that are telling us to be very cautious now, and that the markets are in the process of changing, forming some sort of a top here. Now we do have the McClellan oscillator, and we are in this neutral zone, as we know, 70, negative 70, plus 70, and we're only down about 28. But what happens, as you can see, we're making lower lows, lower highs. We had that 2-day push up, and now we have this 2-day push down, again making lower lows and lower highs. So this tells me that it seems that momentum obviously is shifting, and we need to be really cautious. Now, obviously, this does not tell us to go buy the market with 2 hands here, because we are not oversold or deeply oversold as we like to be when we hit the 70 area, 80 area. If that were to happen, I'd buy stocks the next day, regardless. I wouldn't even think about it. I'd buy stocks, and then that does give you 2, 3, sometimes even a week of a retracement rally here, as you can see here and here. And if we get way below that with the Bollinger Bands like we did here and here, you see we had a nice big move up here. So let's just keep an eye on the McClellan oscillator. Bullish percent SPX has gone on a sell signal as of yesterday. Again, not a good sign. This is a very reliable indicator. Yes, it does give you a couple of whipsaws, but now that we're getting away from this 8, we're going to see what happens today. Maybe we push back into it, back test the 8, and then fail. And that's what I'm going to be looking for. Hopefully we get some sort of a little bit of a dead cat bounce here today, maybe tomorrow. We do have end of the month coming up this week, as you know, and it does provide us with a little bit of stability. Markets do come in, inflows come in, and mutual funds put money to work, so it kind of pushes the market up here. But we'll see. Maybe this changes. Maybe a lot of mutual funds and managers, they start locking in profits for the quarter. So that's something that we need to keep an eye on here, and that could go either way. Stocks above the 50-day moving average, another one of my favorites, as you can see, is on a sell signal at these areas here above 80%. Right around that 80%, we get a market sell-off, as you can see. We've had several times here. Okay, so that's something that we need to keep an eye on as well. Now, if we look at the stocks above the 200, which is even worse, it's making lower lows and lower highs and just can't break it back above the subtrend line. So, again, guys, a lot of red flags now starting to come to fruition here. Markets are tired. They seem to be willing sellers and not too many buyers out there. Okay, so that's something that we want to keep an eye on. Here's the end of day tick now, not the intraday tick, but end of day tick starting to come down now below 0. Let's see how long it hangs out below 0. The longer it hangs out below 0, more and more telling me that we are now headed lower. So that's something that we need to continue to watch here. VIX, not doing too much of anything, but we didn't really do much of anything yesterday. We basically stayed pretty much subdued in the indexes, and big cap tech took a big hit. Some of the other stocks rolled over as well, but not as much as the momentum players did. But as you can see here, VIX is, I think, ready to catapult out of this area. And again, Bollinger Bands are starting to come in again, starting to build, meaning energy is building in this area. So it's going to do one or two things. It doesn't tell you which way, but with positive divergence forming here as the VIX doing really not much of anything, telling me that I think the path of least resistance would be up, and that would be negative for stocks. Okay, so let's keep an eye on those two. Now, we want to keep an eye on, obviously, the emerging markets and FXI. There is a little gleaming light, if you will, for the bulls. The EEM is showing an inverted head and shoulders here with a slanted neckline. This is a bullish pattern that did not trigger yet. So remember, it did not trigger, but I do like the higher low from this previous low, which would be the head area. Left shoulder head, right shoulder, slanted neckline. It's going to need to break back above this area and, of course, the 200-day moving average. So it does have a lot of work to do, but it seems to be stabilizing. Remember, this market sell-off we had several weeks back was due to the emerging markets. Okay, so let's keep an eye on that. If it stabilizes and the markets could kind of chop around another few days and starts to break out, then I think it would probably take equities with it. Take a look at China. As you can see, China did okay as well. Has some positive divergence forming here. Momentum is pushing to the upside, but again, it has a lot of work. It's going to need to get back above the 50 to 200 and this slanted horizontal area of resistance. So it does need a lot of work, but again, it's doing a little bit better than our markets at the moment. So if China and emerging markets can stabilize a little bit, then I think you have some sort of you might have a little bit of push to the upside. Okay, go into the chart segment. As you can see, we had another distribution day, but again, we held the 20-day moving average, so we have not broken below the 20. We are up about two handles. Well, again, yesterday and Friday we were up as well and gave back all its gains right on the opening. So pretty nasty stuff here. Now that's the daily chart. As you can see, we're not doing too bad, and you can even see, you can even make the fact that we have a symmetrical triangle here, a pennant, if you will, and a breakout either way would send a breakdown would send us right down to this next trend line area, which would be 1827. But I want to show you the hourly chart. We have a bearish pattern here on the hourly chart. Here is an hourly head and shoulders pattern. We have the head, left shoulder, right shoulder, which you'd always want to see that right shoulder lower. And of course, this neckline coincides really well with that previous high, which is that Fibonacci retracement. But I just left that there to show you guys. This could be a perfect neckline. Now, if we break this area, take this little vertical trend line. I took it from here to the neckline. I brought it down here, and it gives you 1817. That would be your next area of support, which would be the 1817, call it 1820. That's my area here that I've had for a while. As you can see, it did hold the last time. So I would suspect if this market were to break down, the next area would be this area 1720, and it would hold temporarily. Okay, but we need to see where this thing goes after that. So keep in mind, bearish pattern has not broken down yet, so it has not triggered. It only triggers when we break down. Now, I always like to play this, and when it breaks down, I like to see a back test of this neckline. And that back test meaning some sort of a bear flag, which would probably give you something like, let me just see here, probably run up like this, something like this, price running back up towards it, which once it broke down from the 46, you'd probably catch this 38, and then that would bounce it back and then fail and head lower. That's really the cue to, you could start piling on short here, because of the fact is we've tested and failed, and now we're breaking down, and this would take us to lower lows and lower highs here, as you can see, these 3 points. So that's what I'm looking for. Now, if that does happen, I would be looking to short the market on any given rally intraday. Now, if the market does indeed roll back up again and fails this 1863, I would be looking to short the market as well, okay, or any point in there, as long as we don't take out the highs, obviously. If we even get back up to the 1272 extension and fail, I would short. I'd be willing to short as well. Markets are tired, guys. Bottom line, there's no catalyst here, no true catalyst anyway, to have the markets run up, at least for now. So selling may go away. It's coming around the corner. We're getting into April, so we have another maybe 4 weeks, 4.5 weeks before we get into May, and we do have some seasonal time of weakness. So to me, unless something really dramatic happens, some sort of announcement or something, I just think the markets are due for a pullback here, and that's what I'm waiting for. Right now, we're just chopping around here. As you can see, we haven't gone really anywhere. We sold off, and then that was the big sell-off, and then pretty much most of the day we did nothing. So, again, you have to be patient in this market. It will reward you. You just need to be patient. Okay, let's just run into some of the sectors. Just wanted to show you here the overlay. Again, bonds are willing, at least seems to be breaking out. Now, gold is selling off because it is interest sensitive, so that's to be expected. But if you have bonds moving higher and equities doing not much of anything, maybe a little chopping around, selling off here, I think that bonds are ready to break out here. And if they do break out, you're going to have rotation money coming out of equities and rolling into bonds. And then you'll be back to a stock picker's market. USO, bear flag. I like to see it break back down again, maybe chop around these areas here, and then reevaluate. I do like gold. I do like oil, but again, it needs to prove itself. And there's a lot of geopolitical nonsense going on, as you all know. So anything could happen here. So we'll just see. Let's keep an eye on this. Especially the sanctions out of Russia will affect crude oil prices. So, and it could affect them negatively as well. So that's why I'm staying away from there from now. GLD, no trade as well. As you can see now, clicking back to the 50-day moving average. Then we have the spiders. Now, the spiders did break down where the S&P, the E-mini S&P did not. So the spiders did break down here. The ETF did break down from its 20-day moving average. So, again, guys, we want to keep an eye on it because it doesn't look too healthy here. Now, we did have lower volume from Friday, but as you can see, this is starting to falter here from these upper levels. The transports did well yesterday, actually did much better, and that's our leader here, but we did have some distribution selling come in, but it did help the 20-day, put in a doji candlestick, so kind of undecisive. And look what's happening, Bollinger Bands are pinching, so we could get a big explosive move one way or the other. Again, doesn't tell you which direction, but if we're holding up here, and if the transports can break out and start to break out to the upside, that's going to support the market. And that's something that we're going to need to. Now, here's the other problem, is the leader, another one of our secondary leaders, which is the IWM, is breaking down and now fell out of this uptrend channel from November 2012 lows. Gave us another distribution day. Our momentum indicators are rolling over. This does not look good at all. So this is something that's going to need to recapture this trend line today. Otherwise, if it starts to break down, your next spot will be the 50-day moving average. And then, of course, we'll start looking at now the February lows, and we don't want to be breaking that down here. Okay, so that's something that we're going to need to watch here, because Russell could take down the rest of the market as well. It is a secondary leader, and as you can see, here's the Qs really taking on a trend from big cap biotech and obviously big cap tech, especially the Teslas. The Netflix really got crushed the last couple of days, and that's something when you see the leaders starting to falter. That's another big warning sign. Okay. Here's Intel. I think Intel is still a great buy. By the way, the good thing about it is that these are some of the stocks that you want to watch, that once the market does put in a local bottom, you can actually look to buy this, because this is a great, even Microsoft, you looked at Microsoft, it's now at the upper end of the range, so you don't want to chase it, but if it can come back in, some of the old school tech, Intel, Microsoft, the Cisco's, those are the technology stocks that are starting to move higher. Now, again, pull back, logical after a 4-day run up high, but if it can get back into this area and chop around again, and then break out again on volume, I would be loving this setup, and I would be looking to buy it as well. Apple here, really doing not much of anything, but it looks like it wants to break out here. It stopped. It itself, the price action stopped right out at this upper end of the range here. So we need a little bit more backing and filling, but I think if this starts to break out, you'll test this upper end of the 552 area. And look at the Bollinger Bands, they're starting to tighten here, so that means that there is energy building here. But again, if you get a weak market, eventually this thing would fall to the waistline as well. Diamonds, as you can see, diamonds here held up pretty well. As you can see, we did catch the uptrend line, so it's just chopping around here. But remember, it's one of the laggards, so if everything goes, so goes the diamonds. This thing is just going to get crushed if you do trade it. XLE, doing quite well here. Kind of basin. I do like this on the longer term play to be long. So I'm watching XLE and their stocks inside. As you can see, the OIH, Schlumberger doing quite well. It actually held up pretty decent, as you can see. Look at this from a big long-legged doji. Now we did put an inverted hammer here, so that is a bearish pattern. If it does take out the low from yesterday, we could see it come back in again, which would be a gift to buy. If we could get back into this area right around this 50%, 50-day moving average, and again, that coincides nicely with the horizontal trend line. I will be looking to purchase Schlumberger. Oil and gas, again, nothing wrong with this. It did pull back, but the markets are soft. This is something that anywhere in this area, I'd be legging into a long trade in the XOP. Valero, same thing, holding the upper end of the range here, doing nothing wrong. Even if it came back to the 20-day moving average, it would be doing nothing wrong here. So Valero, on any pullback, I'd be looking to purchase as well. Home construction. Now, this is a little dicey at the moment, but I do like the spot. I mean, I really do like the spot here at the 200-day moving average. So let it chop around here. If we can get out of this channel, then this would be actually another good buy for another test of the highs here. And again, we're coming into the spring season. The builders do have some seasonal strength here. As you can see, XHB, this has to come in a little bit more, back to the 200. KBH really just took it on the chin the last 4 days. So really, I'm not liking this as much as I did back in here. It's gonna need a lot of work, guys. So KBH, not one of my favorites anymore, but Pulte, still like Pulte. It broke the 200 though. Remember, we don't want to catch a falling knife. It's going to need a little time to stabilize, but watch these stocks in the coming weeks. It will produce some decent gains. Lennar is one of my favorites, so Lennar I do like. But again, at the 200, let it base a little bit. Don't catch a falling knife here. So this needs a little backing and filling and a breakout to the upside before we look to get into the builders again. Now the banks are doing quite well because obviously the short end of the curve. When interest rates are rising, it puts a good point. It does help their bottom line. So we have nice little movement in the banks. Banks held up relatively well though. So now J.P. Morgan, as you can see, just really on fire here. I would love to see this pull back to the 20 or 50. That would be a gift. I doubt that would happen. But Goldman Sachs kind of chopping around here, and I like Goldman here, but I think Goldman needs to chop a little bit more. Base and fill here, and then break out of the base pattern, all right? So we want to watch what Goldman does, but I do like Goldman. And now Citibank is looking a lot better than when it was coming down here. So as you can see, Citibank really is forming some sort of a base pattern here. You can see, right? See that little channel? So we're just chopping around upper end of the range, lower end, making lower lows, lower highs, higher lows. So just really doing nothing here, but it's holding above 50. Now, if it can hold above 50 or even flag into the 49.50 and then break out, then I think you'll challenge the high. So Citibank is really one of the ones I really like because it did not do much of anything all of 2013. I think 2014 it's poised to move higher here. And last sector, we do have the solars. Obviously, once the momentum leaders start to move, solars will move lower as well. So you need to know that, okay? I mean, really taking it on the chin. You have Yingling, we did break out, and then we fell down. And this thing's been going down every day since the breakout. So we had a failed breakout here. No trade. I didn't even stay away from YGE. I think there's better sectors, better stocks out there like First Solar. This one here is totally my favorite in the sector. But as you can see, we need to come back in about 50% of that. That would be a gift. And that's almost 10 points away. So I think you see 100 at the end of the year here in First Solar. But any weakness, any good pullbacks you'd want to look to buy, set up a Fibonacci retracement and look for a pullback in this sector, in this stock itself.